Hello everyone, welcome to a new video. Beyond Meat just reported earnings this past May 6th after the close, and let's just say that these were not as the analysts were expecting them to be, which led the stock to be down 7% on Friday, and at some point on the day it was almost down 10%. However, whenever things like this happen, I think that it's a great moment to have a closer look at the company, see why exactly is it that the stock dropped, and whether there are any fundamental changes in the company that have happened, because if none of these things alarm us, probably it can present us with a good opportunity of investment. In today's video, I will be precisely doing this. Firstly, covering the earnings of Beyond Meat for this first quarter. Afterwards, we will go into the news and progress surrounding the company. And finally, I will also quickly go into the valuation, the current valuation, and also some price projections if we were interested in investing in it right now. With that said though, and after I remind you that if you enjoyed the research in this video, it would help me out massively if you could give it a like. Let's go for it. First of all, let's start with the main reason why the stock dropped, and that was, as we already commented, the miss on earnings, or more than miss on earnings, miss on the expectations that the analysts had, which, by the way, they were expecting revenues for the quarter in the range between 113.6 million to 114.35 million, depending on the source you looked at or the analyst, and a loss per share ranging between 19 and 27 cents per share, but in fact they ended up reporting revenues of 108.2 million and a loss of 43 cents per share. In my eyes, the revenues were not so much of a problem because yes, they missed, but the miss was not by a lot. Instead, when looking at the net losses, they almost doubled what the analysts were expecting, which was of course not liked at all. And in the sensitive market in which we are in which sometimes companies even beat expectations but they still go down in price, I think that it was no surprise that Beyond Meat fell 7% then on Friday. Now that we know the reason though, let's go and analyze a bit deeper the numbers that they reported for this quarter. On it, I will start with the revenues because more than the losses, which are, let's say, more normal to have with high growth companies, what Beyond Meat needs to really focus on and deliver on is growing 30, 40 or 50% to really justify its valuation and succeed, of course, moving forward. Actually, if we check the revenues by channel and geography, we can see what I already commented on the previous analysis that I did on the company some months ago, which, by the way, I will leave it here above for you and also down below in the description if you are interested. But as I was saying, what we can see is that the reason the company is not growing as analysts or investors would like is due to the impacts of the pandemic. In both the US and international markets, the revenues from retail sales, so from selling their products in stores or supermarkets, has been up decently quarter over quarter, with 27% up in the US and 189% internationally, which is great, and I actually think that the biggest opportunity for Beyond Meat moving forward is really the international expansion. However, the real reason for the decline of revenues for the quarter, and the same reason that decreased the growth last year also, have been the revenues from food service. And food service, in case you are not familiar with it, it's basically restaurants or other food and beverage establishments that are offering also amongst its products things bought by Beyond Meat or supplied by Beyond Meat, and we will go also into some of the partnerships later on, but I think that I don't need to comment on that because we all know that all restaurants and so on have been largely affected by all the lockdowns and restrictions. Overall, revenues for the quarter were only up 11% year over year, which is a bit disappointing, but as we discussed, driven largely by external factors, especially since the company had been growing at much larger rates over the past years before the start of the pandemic. Moving away from the revenues, the next topic for the decline was the higher than expected net loss of 43 cents per share, or a total of $27 million, while in the previous year they had reported profits of almost $2 million. The reason for that has been, leaving aside the effects of the pandemic that mostly affected the top line as we have just commented, focusing just now on the losses on that bottom line, the main reasoning was that Beyond Meat had higher transportation and warehouse costs, and also we cannot forget that they are building two new facilities, one in Netherlands and the other one in China. Of course, the one in the Netherlands focused on expanding in the European Union, and the one in China towards entering the Asian market and the Chinese one. And of course, all of these drew the costs up. Looking at the balance sheet to see if they are well capitalized, we see that they currently have $1.1 billion in cash in the balance sheet, which means that out of the total assets, 75% of these are in cash. This is great to see, and it has been due to the fact that during the first quarter, they issued $1 billion in convertible senior notes, which will be due in 2027. And in case you don't know what a convertible note is, it's essentially somebody giving you a loan, but instead of paying the interest back and the loan back with money, you pay them back with shares of your company at a later stage or at a later point in time. And this is precisely what they did. And in fact, the net proceeds from that were $979 million approximately. And in the earnings call, the CEO highlighted that they did that in order to make sure that they are very, very well capitalized in order to support the international expansion phase that will begin very soon. Back to the balance sheet, they went from a debt ratio of 21.56% at the end of last year, which was extremely conservative, to a debt ratio now of 82.10%. But this has been, as I said, due to having issued the senior convertible notes. And it is also important to highlight that this debt will not have to be paid back until in a few years' time. And it will actually be paid back in stock. So although the debt ratio is now quite high, it is nothing concerning. Now that we have covered some of the main financials, I would like to go into the latest news and also progress surrounding the company. Because as I already said at the beginning, bad financial results are one thing, and this can be driven by external factors like it clearly is the case for Beyond Meat. But if fundamentally the company is pushing strong, like it is just a matter of time before it goes back to reporting extraordinary growth like it was reporting in the past years, as soon as things go back to normal. The first big announcement is that Beyond Meat just released now, beginning of May, the new version of the Beyond Burger, which is said to be an even improved one from the previous one. Unfortunately, I have not yet tried it, but I would love to. Also, they landed partnerships during the past 6 months with Yum Brands, which are the owners of Kentucky Fried Chicken, Taco Bell or Pizza Hut, and also with PepsiCo in order to produce plant-based snacks. Other than these announcements, I think that the graphs that I will show now are also interesting to not forget the bigger picture and the progress that Beyond Meat has already made so far, even if lately they have been largely impacted by the pandemic. On it, firstly looking at the stores, from the IPO, which was in October of 2018 until now, these have increased overall in 281% in 2.5 years. And I would expect this to increase a lot more, especially internationally as the brand further penetrates the European and Chinese markets. Additionally, in terms of brand awareness, it has also increased since the IPO substantially. The last aspect to highlight before I go into the valuation is that part of why I like the company so much is because it's really pushing for that innovation and devoting a lot of money into research and development. In just looking at the data from this past quarter, they more than doubled the amount of money that they are spending in research and development versus the previous year. And as a percentage of the total net revenues, when compared to some of its competitors, it is also much higher. On this though, we should also keep in mind that the percentage number seems a lot, but all of these other competitors like Nestlé, Kellogg, Kraft Heinz are making billions of dollars in revenue, while Beyond Meat is still in the millions. So actually it looks very good for Beyond Meat in terms of publicity, but with overall numbers, probably all of these competitors are still spending more than Beyond Meat in research and development, simply because yes, they are allocating a much smaller percentage of their total net revenues, but their total net revenues are probably 10 times, 20 or maybe 50 times what Beyond Meat is currently making. Now quickly going into the valuation, at the current price of $110 per share, it is trading at a price to sales ratio of around 17 times, which is certainly demanding, and probably at the current growth rate it is not justified. But the thing is that as we go out of this pandemic and not only retail sales increase but also food service, which are very important for Beyond Meat, it should go back to growing at more than 50% year over year. Nevertheless, in my price projections, to be conservative, I have placed that Beyond Meat will continue to grow from now onwards at 40% year over year until 2025. If this were to be the case, then Beyond Meat would be bringing in revenues of $2.1 billion, and with this number I have projected 3 different scenarios depending on the price to sales ratio in 5 years. The first one is considering that it continues to trade at a price to sell ratio around 20 times, the second one at 15 times, and the third one at 10 times. This would mean that the stock price in 5 years could range between $143 to $694 per share, depending on the valuation it is trading at that point in time. Personally, I think that based on the past in which Beyond Meat was growing at 100 or even 200% revenues year over year, once we get out of this pandemic and food service sales start to pick up, it would be no surprise if Beyond Meat grows at significantly more than 40% year over year. And if this is the case, then the price projections that I made, or the price that we could expect it to trade at in 2025, would also be much higher. Again, here each one can do its own estimations, but I personally like to be very conservative. And at the same time, though, we also need to remember that there is increased competition and many other players entering the market. But for me, and currently also, Beyond Meat is the leader and it has a very good brand recognition. And I think that it's this brand that will also help it a lot in maintaining this leading position also moving forward, and especially if they keep on innovating like they have been in the past. Let's see how the next quarters and years evolve, but I personally really like Beyond Meat. I actually added more shares when it fell to $107 per share, and if it falls below that, I will add more to it. Anyways, I would like to remind you that I'm no financial advisor. Everything that I shared in this video is just my research, my personal opinion, but you should always do your own due diligence before investing in this or any stock. With that said though, this is the end of the video. What are your thoughts on Beyond Meat? Are you a shareholder? Did you buy more shares of Beyond Meat when it was falling? Please let me know your thoughts in the comments below. If you enjoyed the video, then don't forget to give it a like, subscribe to the channel if you're not yet subscribed, and as always, see you next time.